What is going on, YouTube family? Welcome back to my channel, Colton Lives Bullish. I could not be more thankful for everybody that's reached out, everybody that's commented, everybody that has subscribed to this channel. We just busted through 500 subscribers over these last couple months, and I know this is the first video that I've posted here in about 2 months, but I wanted to hop on here, give you guys a quick rundown on an indice that I've really been following along this summer. And I hope you guys are excited. I got a lot of new content coming, not only this week, but throughout the rest of the year. I really want to take this YouTube channel to the next level. The messages that you guys have been sending me have to do with a certain key couple concepts that I know I could break down more in depth for you guys. So I'm super excited today. I'm going to make this video a breakdown of the S&P 500, guys. Last week, price action was very beautiful. And there's some key concepts inside of there that I really wanted to touch on today before the market opens, so we can go ahead and review it later on this week. So I'm going to go ahead and share my screen, guys, and we are going to get right into it. Now, if you are not caught up with everything that we do look for on this channel, I would probably go back and rewatch some of my videos, but we're going to start on the daily when it comes to the S&P here. Overall, guys, this is what we want to be looking for, right? When I initially come to a chart, I mean, off bat, obviously starting with the bigger time frames, but for the most part, I'm looking for pools of liquidity and I'm looking for imbalances of price, right? So what initially, catches my eye right here when we look at this price action, and what I'm going to do is actually go ahead into replay mode. So we don't know what happened this week. Perfect. So this is before last week's price action. As I'm looking at this chart, right, off bat, I see, hey, these are pretty much some areas of equal highs, right? I'm going to go ahead and do my liquidity template. So we have a pool of money right here. What lies right above this liquidity area? As I look left, we see that this daily structure, right, we have left an imbalance on this sell candle, which means during this day, we had it was full sell action, and we had no retracements from the wicks back into it from that next day. So I like using this parallel channel, bringing it out from that previous day's wick, right, and bring it all the way down to that next day's wick, right? So see how this imbalance of price lies right above this liquidity area, right? Now, I also noticed that inside of this imbalance, we actually have a whole price of 3,300, right? This quarters theory, guys, it works for Forex, it works for metals, it works for indices. So overall, I've just pointed out a daily target that I'm going to look for to the upside. Now, if I were to do the same exact thing to the downside, what would be my next point of interest? What would be the next area that I would want to train your eyes to go ahead and consistently see over and over and over again? Well, as I look through this clean price action to the upside with expansions and retracements, I do see a small area of imbalance right here. So we can go ahead and mark this up, right? Small imbalance right here. What do you guys notice? It's actually right here at a whole level price of 2,900 as well. So I'm going to go ahead and mark that up. 2,900. Beautiful. And, likewise, just like we have this pool of liquidity before the imbalance, you guys may notice that, these wicks may go ahead and, kind of point out an area of liquidity for us here. So we do know that there are orders lying above and below these daily pools of liquidity and imbalances. But other than that, that's what I'm going to do for the daily, guys. You could try to do more, but overall, I want to be looking to play in between this not only 400-point range, but just in between these imbalances, right? So let's go ahead and knock it down a time frame. I'm going to do the same exact thing on a 4-hour time frame. And again, I have it replayed so you can't see the price action that went on last week, right? So now, as I look into all of this price action in between the two pools of liquidity, do the same thing. What am I going to look for? More pools of liquidity. Well, I see all these equal highs hanging out right here, right? So we know that these are just the institutions pretty much creating bigger pools of money, right? As you see, when market closed on Friday, we were coming into this imbalance that was left on this up candle. We have almost filled the entire thing, but not quite. So let's go ahead and mark it up. right there, pull it down. Cool, perfect. Now, again, what does my eye see? We are literally lying right here at a whole level price of 3,000, and it didn't quite get tapped on close on Friday. So I think this is still really valid going into market open last Sunday, right? So see how, again, I've done the same exact thing on the 4-hour time frame that I did on the daily time frame. And now when we knock down to the hour time frame, I'm going to continue to do the same exact thing. Some of you guys may call this, confluence trading. You may have heard that the market's fractal, where the same thing happens on the daily chart that happens on the 4-hour, the 1-hour, the 15-minute, the 1-minute. This is all I'm doing, guys, trying to point out a high probability area. Now, what I can tell you guys is that we have two pools of liquidity to the upside versus just one to the downside. So overall, just in my opinion, I feel like we would be looking for some bullish price action, right? Yes, there's the opportunity to get down here, but I like this opportunity getting up to 3,300 even more, right? So let's go ahead and knock down to the hour and now see what we can work with. Right, so as I play into this price action, you guys can see the pool of liquidity that I've made here. You see that this was market close. You see these equal highs pretty much laying here. So now we have three big pools of liquidity pretty much hanging out to the upside. Right, now from the hour chart, what do you guys notice right here? Check this out. So this whole level price at 3,000, and this is why it's so key. Look how the drop off, the institutional down move came off of 3,000 right here just to move the markets back up, right? Look how there was a pool of money hanging out to the left side before they went ahead and ran that institutional down move, right? See these, if I dive closer in here for you guys, see these two down candles? These are the banks selling just to buy the market back up, right? Look how the open lies right here with 3,000. So this is super, super key in my opinion. So what I want to do is wait for market open on Sunday, right? Sunday, 6 p.m. is when the indice markets are open. If price wants to try to break down and break through 3,000, there's no imbalance. There's no stopping it. I would want to see that this price go ahead and tank out to 2,900. Now, if we see some clean price action respecting this imbalance and respecting this whole level of 3,000, then we could go ahead and see price action maybe take out this pool of liquidity, maybe touch this institutional candle, maybe come up into this small liquid imbalance, maybe come take this pool of liquidity, which I think will probably be the weekly target right here, because we would be talking about 160-ish points on SPX, right? So let's go ahead and see how price action went ahead and played out opening into Sunday night. So as you guys see, the first candle, right, of market open actually opened into the price of 3,000. So we got that first initial touch, right? So you may not have taken an opportunity on that, right? Maybe you're looking at a smaller time frame, and you guys, again, there's a lot of different techniques when it comes to entering, but I want to show you guys the overall price movement on SPX this week, right? Because look, if we're respecting 3,000, you guys need to understand what candles are we going to go look for us to play into. Look at this down movement, right? We have this up candle before a down move. We have these up candles before a down move that left a little imbalance here. We have this up candle before a down move. So if I wanted to go ahead and just point out that liquidity or that imbalance area that we got hanging out right here, right? These are my targets to the upside if you were entering anywhere off 3,000, right? Look how this lies right here at 3,100. So overall, what I want to show you guys is that just by identifying what happened on the daily, 4-hour, 1-hour, you guys can go down into a smaller time frame and actually be able to take trade setups based on just this price action here, right? And pretty much be able to ride this beautiful trade up all week. And I kind of just gave it away, but you guys are going to see as I break this down, what really happened, right? So look, market opens, opens down into the 3,000 level, right? We go ahead and see the market push back up, pretty much creating these equal highs right here, right? And we know that if there's equal highs laying here, those are, you know, pretty much retailers. I don't know. I just got an updated Mac, so I may not be able to find what I'm looking for here. But either way, pool of money hanging out right here, guys. So what do you want to do? Wait for, you know, maybe some retracements that come tag this candle like you may be seeing right here. Or like I'm going to show you guys later, you can even play this structure right here, right? And I'm going to show you guys that. But there's a key thing that happens here, guys. Watch. As this market plays out a little bit more Sunday night, we're getting into midnight, right? 1 a.m., 2 a.m., and you guys are going to see that, you know, you could always wait a little bit longer, you know? So check this out. What do we make? A little pool of equal lows here, and you are going to see the market go ahead and drive down because, right, what are they doing when the market's moving sideways? Creating sell orders, creating buy orders. A lot of people are getting over leveraged inside of here. So what do they want to do before they go ahead and pull the market above this area of equal highs? They're going to come retest that 3,000 level one more time. And see how fast this happens, guys? See how, you know, again, this could have been it, right? And if you entered buy positions anywhere up in here, right, you would have been in nice profit through Asian and through the beginning of London, right? Let's see how many points you might have been up. 30-ish points. You guys should be breaking even, whatever it may be, on 30 points, unless you're holding for a longer term target, right? But overall, they had created enough money inside of this small trend here that they had to pull the market down one more time, right? So look, one push down plays perfectly off of the price at 3,000 because this was a major imbalance level, right? You see the market move up. Now again, you're not always going to catch this sniper entry, and you don't have to. What do you need to do? Money gets behind the move. Now we're either going to play the retest of this structure, or you could play pretty much the retests of this candle. So let's see if we get a shorter term retest off the open of that institutional. I don't think so. On a higher time frame, on the hour, you guys are going to see markets start playing above our area right here. And look at this on the hour time frame as well, guys. Right, training your eye to see this. I'm going to go ahead and delete this. I'm going to go ahead and delete this. Right, look at this price action. Right, again, you don't need to snipe this off 3,000. If you did, perfect, because what are you doing? If you're taking that entry off 3,000, you're throwing a stop loss right down here above this low. You're using a 5 to 7 pip stop on SPX, right? 29.94. But look at this, right? Clean open, runs the market up, creates this pool of money. Before they go ahead and continue the market above this pool of money, they have a fast drive down, right? Leaving ultimately this down candle, leaving ultimately this down candle right here before you see the bullish engulfing, right? Now what are they going to do? They're going to pretty much retest structure right here. And you're going to be able to walk this trade all the way up. Where are we going to walk this trade into? Right? What's your first target? Needs to be any form of imbalance, right? Yes, there's imbalance here, but we could go ahead and look at this first, this up before this down, you know, again, not to have too much going on the chart. But again, you could just, I know that's not straight, but look, up candle, down move, come play into this for TP1, right? You can play into this imbalance for TP2. And overall, and I'm going to go ahead and let this market play out, you guys are going to see that we achieved the target up here just by identifying what happened Sunday night. And there's going to be multiple areas that we could come back in this market and catch retests on. It doesn't have to be perfect, guys. You just got to understand the schematic and be able to point out these certain imbalances and liquidity areas. Look, so again, we're printing the same exact candles. down candle, that retests this structure, up move, right? Let the market play out a little bit more, right? Pull down. What did we do? I'm going to get rid of these arrows. Right? So we already played off of this. Look, down candle, up move, come back, mitigate that candle, break even on that sell to buy. And now you're going to see what? They're leaving these pools of liquidity for us to come capture at later times. Right? Now we're going to go ahead and see the market come play into our 3,100 level. 3,100 level, and do our short-term sell position off of this institutional candle, right? So you guys can play it back and forth, or you're still holding your buy positions down here and you got stops up above somewhere here, right? So how many pips did this sell-off give you, right? If you would have played this institutional candle, you would have went negative 10 points maybe to go ahead and catch, 25 or so, whatever it may be, right? Now, what are they going to do? They're going to use what was once that old area of resistance as a newfound support off 3,100. And as this week really plays out, you guys are going to see them go attack that bigger pool of liquidity that we had pointed out on a bigger time frame. But all this small time frame price action in here, guys, right? The only reason you're taking trades on this is because of the bigger time frames and you understand what's actually going on over here, right? Look, let me clean it up a little bit. Right? If you don't catch this, this is pretty much your next entry, right? If you don't catch this, you can maybe catch this, right? Highs, lows, run down into this down candle, move back up, retest structure. Now, what happens is we breached this liquidity area, right? We pretty much made almost an equal high with this right here, but overall we breached all of these with an up candle before a down move. So now maybe, again, market moves up Monday, Tuesday, Wednesday, beginning of Thursday, right? Now you might see that small reversal back to the downside. But overall, what I wanted to show is that target was achieved, right? The liquidity target, the highs from last week were taken out on that next week. Boom, right here. And now what do we want to do? Right? That was the price action from last week. And you guys just want to be able to walk price up, up, and up. Right? So now as we pull back, what do we have? Despite everything else, we are still pretty much playing with this pool of liquidity right here. So overall, I still want to come attack this going into the next coming weeks. As you guys see, even on a 4-hour time frame, everything was pretty clean. Look at this 4-hour close candle. You could have got in anywhere last week, to be honest, and rode this up because of the momentum that we had coming into all of these highs over here. So overall, guys, that's what I wanted to break down for S&P. When it comes to smaller time frames, again, let's even just go look at that market open real quick. Let me show you guys again, the same thing that we looked for on the bigger time frames are going to happen on the smaller time frames. All right, let's dive in here. So look, right, market opens down in 3,000, right? You get that small push up, retrace back down, right, into the candles, push back up. Look at this. Like, I'm going to get rid of this imbalance. But you guys got to understand, you could just literally take your last down candles, right? Last down candle, up move, mitigation. Last down candle, up move, mitigation, right? Last down candle, up move, mitigation, right? What do they do as they come down and mitigate all these candles? What are they going to create up top? They're going to create those pools of money that could come be taken at a later time. So overall, it doesn't matter if you enter here. Doesn't matter if you enter here. Doesn't matter if you enter here, right? Which isn't as clean because we pretty much left these equal lows, and that's why the market had to come back one more time. You need to understand that when you take a pool of liquidity to the upside, especially when you get a candle like this, you want to take some stuff off the table, guys. Even if you would have entered late, that's still a good 25, 30 points in the SPX markets, right? So you want to take it off. Overall, they didn't have enough, they had too many buyers inside of here on Sunday. So what did they want to do? They had to drive the market right back down to 3,000 one more time, come play below these entries. Because again, anybody that didn't take profits would have taken that stop loss. They would have moved it up in here, probably right below these equal lows. They would have come and stopped them out so they didn't catch the buy the rest of the week, right? And that is the mindset that the institutions have when it comes to these markets, guys. So, again, I just want to be super transparent. Let's check this out on an even smaller time frame, right? Because you guys can do this. If you know the overall, the overall outlook on the markets, you'll be able to follow along. So let's check this out. Right? Because it could have even been, a minute time frame mitigation that they needed to come fill this, right? We could have a small imbalance happen in here. So check this out. Market opens, hang out, move up, test down. So see how we have this down candle and this up move, and we really never came back to that down candle, right? That's why they had to come pull it back to 3,000 Monday morning, right? Because what is this? Yes, this was a push down below these lows to go ahead and move up, but overall, look at this little equal bottom right here, right? They had to come fill that. You just got to note, you got to look for these candles. The sell to buys. The sell to buys. The sell to buys. Right? Now, what happens when you get to the upside? Liquidity pool. Up candle. Down move. Right? I wanted to show, so here are those equal bottoms. Look what happens here, right? And this took off, so you may not have been able to get a great entry, but if you're watching this price action, right, in core New York session between 9:40 in the morning and 9:52, you would have seen them bunching up sell orders, bunching up buy orders, right? Shoot one candle down to 3,000. Move it back up to the area, and then look at this. This is pretty much where you want to be taking it right here, right? Because again, you're either throwing your stop below 3,000 or your stop down here between 90 and 94 on that previous low, right? And just look how clean. You could even, again, you don't have to get the sniper entry. Wait for this close, and you're good to go, guys. The market never came back and revisited anything near 3,000, right? Because of you understanding what this price action should look like. Right? And again, what do? They do it over and over and over again. Down candle, up move. Down candle, up move. Mitigation play. Right? And we could do this over and over and over again, guys. But like I said, I'm going to have quite a bit of videos to go through this week, right? Again, right here. What do? Bunch it up, down candle, up move, come back, retest these areas, and we're out. So I hope you guys enjoyed this breakdown of the S&P 500. We've been loving the indices when it comes to the squad. They've been absolutely killing it, so I'm super proud of them. I'm proud of you guys. Please keep tuning in, asking questions, sending me messaging, commenting on the videos, and I'm going to bring a lot more for you guys this week. So much love. Let's get it. Continue to live bullish, guys, and let's go.